Oil steadied in early Asian trade on Tuesday as indications that producer alliance OPEC Plus sought to avoid a collapse in prices along with a slight softening in the US dollar tempered an earlier sell-off. Iraq Oil Minister Ihsan Abdul-Jabbar has said the Organization of the Petroleum Exporting Countries and allies, including Russia, were monitoring the oil price situation, wanting to maintain balance in the markets. OPEC Plus has boosted output this year after record cuts put in place in 2020 due to demand destruction caused by the COVID-19 pandemic. But in recent months, the organization failed to meet its planned output increases. For more on this now, let's go to Russ Mould, who is AJ Bell Investment Director in London. Russ, many thanks for being with us today. So first of all, an easing of the US dollar, which trades, as we said, inversely with oil, helped to support prices a little. But we've also seen earlier on Monday that the dollar actually hit its strongest level since May 2002. Can you just help us understand what's happening to these prices as a consequence? And what about this inverse correlation between oil prices and the US dollar?
Yeah, the dollar is benefiting, first of all, from the Federal Reserve's very aggressive interest rate increases, much faster than most of the major Western central banks. So money is flooding into dollars. And the greenback is also benefiting from wider market and economic uncertainty. And at those times, investors and traders look for a somewhere safe to hide. And the US currency, the world's reserve currency, is generally one beneficiary of that. So that's one reason. Two reasons why the dollar is strong. And as you've correctly said, if the dollar is strong, countries who don't use the dollar as their currency or don't have a dollar peg find that buying things priced in dollars, it's more expensive, and oil is a classic example of that.
Interesting. And we remember, Ross, that during the summer there were people pointing at a potential $170 a barrel, $200 a barrel for the price of oil. Now, it's a very, very different scenario. And I mean, what impact do you expect of all the things that we're observing right now? So uncertainty, oversupply, disruptions caused by the conflict in Ukraine, but also tightening monetary policy around the world. What sort of impact will this all have on prices at the end of the year and early next year?
Yeah. It's good. I mean, they're all good questions, Ludovica, and my record at forecasting oil is absolutely appalling. So as soon as your viewers have finished listening to me, they'll probably do the opposite. But what's been weighing on the oil price have been fears of recession, the stronger dollar, and also America's decision to release some of its strategic reserves to increase supply. What's been helping the price of oil has been the Russia-Ukraine war, ongoing sanctions against not just Russia, but Venezuela and Iran. OPEC hasn't been able to increase production. And also now we have some other complications, such as the hurricane in the Gulf of Mexico. Hurricane Ian, you may see some US oil producers have to shut down or at least potentially delay production while they sit through that storm. So oil remains as impossible to predict as ever. Economics, supply, demand, currencies, geopolitics. I'll leave it to people far better qualified than I. But if I was forced to guess, at the moment at least, demand is still growing and supply isn't, which would suggest that the prices are relatively well underpinned here.
All right, interesting. Many thanks for this update, Russ Mould.